Beth Harrison with Dallas Native Voice, and I'm with Jason Browning today with Academy Mortgage, and today I want to talk about different loan programs because people think there's really only two ways to buy a house. It's a 30-year loan, it's a 15-year loan, it's a jumbo, it's not, it's FHA. There's more than one way to buy a house, and I know you've certainly saved several of our clients from kind of weird situations that you've been able to work around. So tell me, what are some things that are available that I might not even know about?
Well, thank you. Thank you for having me, Mary Beth. Yeah, we do offer the standard loans. We have our Fannie Mae, we have our FHA, all the government loans, VA, USDA. Those are kind of what you call as the standard loans. But when you really start jumping into kind of pulling back the curtain on some of the other loans that people can find challenging or just not a whole lot of folks do.
Not all of our people fit into this wonderful box.
Wish
they did, but...
Yes, absolutely right. So some of the things that are more popular right now with the lack of inventory or just wanting to live in a certain neighborhood is the renovation team. We have renovation loans that go through government loans or conventional loans, and that's where you can find the home of your dreams on the block of your dreams and make it what you want.
So let me understand. I go in and I buy a house, let's just use easy numbers, for $100,000, and I know that it's going to take me $30,000 to get this house, new kitchen, new bath, carpet, whatever,
yes.
Right?
Mm-hmm.
So I do the loan for $100,000.
Well, actually what you'll do is you'll take the improvements that you're going to potentially do, they add that to the value of the home. So instead of what you're thinking the value is 100, the value is actually 130, and then you take your 5% down payment off the 130.
Oh.
You're not out of pocket that 30. You're not doing a separate loan for the 30. It's all in the one
So
loan.
the seller gets their $100,000, they go down the road,
Yes.
and then I have so many days or months, whatever the size of the project is, to get that done, to get that $30,000 spent, that I guess you all keep in your hands and we dole it out little bits at a time.
Little disbursements, and usually the longest that you'll have a loan like that is 6 months, and then it's done.
Well, that's plenty of time to do really a major renovation.
Oh, absolutely. That's what they consider a major.
Wow, that's a great loan, especially trying to get into a specific neighborhood and just can't quite find that house that's done,
That's right.
like they want it. Wow, what else do you have? That's a good one.
Yeah, so we also have a great condo team here too, especially within the Dallas area.
Yeah.
There's a lot of condos coming up, a lot of condos that are not warrantable. So we have a team that will allow us to do condos and non-warrantable condos for those that wouldn't qualify for standard financing.
Okay, define a non-warrantable condo for me. What does that mean? That means it's not livable? What does that mean?
Yeah, that's a very good question as well. A lot of people are confused by that. But
Yeah.
basically warrantability means that it's not going to kind of fit into the box, as you said a moment ago, of like this many people own it as an owner-occupied.
Oh,
It's
okay.
not an investment. One person owns more than 10% of the units, things of that nature.
Okay, got it. So I totally get that then. Yeah, because there's a whole owner occupancy ratio that needs to be met for you guys, for most lenders to do a condo. So
That's right.
that's a really valuable loan to have, because it's really hard to get a condo done if it's not everyone living there that owns it and lives there. So
Right, and most condos are not the cookie cutter condos
no,
like they used to be.
no, they're not. Gosh,
Absolutely.
what else do you have? Okay, this is great. Let's keep going.
We have doctors programs that will help these doctors that are just coming into the workforce.
Right.
And a lot of the times they haven't started making the money that they're going to be
And
making.
their student loans are out the roof.
Absolutely.
They had the potential of income, but in the beginning, they've got some serious loans stuck up.
That's right, and we basically just kind of put them into the marketplace as if they're going to be making the money that they should be making.
Okay.
So it allows them to qualify for a great loan.
So would you do that for me, being
Absolutely.
a realtor?
Yes.
You'll just give me a loan on what I might be able to make?
Absolutely. Potential. Just not
We'll
potential.
call it a realtor loan. Okay, add that one to your list.
Yes,
okay,
yes.
Okay, thanks. Okay, what else do we have?
And then we also have construction lending, like the one-time close or the construction when you close and then it turns into a permanent financing. So again, with some of the tear downs and things of that nature that are
Right.
happening in the downtown area, it allows you to do one loan, close on that, and then the construction piece starts. You don't have to go back and pay two sets of closing costs, worry about rates changing, things of that nature from the
Right,
time you
that's
close.
huge, because we find the house that they want that's going to be torn down. They go find the builder, and then so they can pull the whole thing together in one big loan.
That's right.
That is a great loan. Wow, you've got all kinds of things there. So basically, we just need to know that it's not a one size fits all. And if you're having a problem out there, give Jason a call at Academy Mortgage, and he can figure out how to fit you in. I know you have really helped a lot of our clients fit a niche that they totally didn't fit into before.
I've got one more for you.
Okay.
This is one that I would say that really people don't know about this loan, and it's the loan for someone that they don't have credit or no credit score. You know, a lot of the times people think that, well, I don't use credit, I don't qualify for a loan. And we actually have a program out there, a couple of actually, that can get you into a home as if you were, paying your credit cards like normal.
Wow, we do a lot with Dave Ramsey. We're one of
Yes.
his ELP advisors, and Dave, of course, believes in no credit and
That's right.
having
Yes, he
and
does.
paying cash for as much as you possibly can. And so a lot of our clients from that program come in and they don't really have a lot of credit because they don't use their credit cards, and bravo for them. But when it comes time to get a loan, it's really, really difficult. So that's really interesting that you can, I guess you still do credit check, you still do all of that,
Right.
but there's not a lot of credit to check because
Exactly. It's
They
almost a
aren't using it.
verification that you don't have credit.
Okay.
So it's not going to be the person that had credit in the past that let everything go, charge off collections. That's bad credit.
Okay.
No credit is if you just don't use credit. Like you don't have a home loan, you don't have a car loan, you don't have a credit card. It will come back as a 0 score or not reporting, and then I'm going to basically give you like a 640 credit score, and you're going to qualify for several loan
Interesting.
products.
Wow, you've got a lot of really good things there. All right, well, thanks for, giving us all that great information, and thanks for listening. As you know, we are one of Dave Ramsey's ELPs, and we're always glad to help that group as well. You can find us at dallasnative.com, all social media, and thanks for listening.